Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Remember the Nifty saw pause yesterday after a massive rally of nearly 2,500 points in the last 2 months. The new trading week, however, began on a subdued note for the Nifty as the index, despite recovering from the day's low, could not sustain at higher levels. We did see consolidation continue, but will we see more consolidation in the days ahead? We will tell you all of it. But first up, the top headlines this hour. Stocks are likely to take a breather on Tuesday as overheated valuations and prices after a 7-week rally make a case for consolidation on the Nifty. Blue chips likely to outshine mid-caps. Traders will continue to concentrate their energies on low-ticket, high-beta stocks in the cash market as hectic price and volume activity continues. Extreme caution is advised on the long side. Very good morning to all our viewers and good morning to you, Shail, as well. Well, just like how I was pointing out that the Nifty ended the previous session in the red and is now below 21,450 odd levels. It did not get any support from the banks that were supporting the markets over the last 2 months odd. The IT stock that started to perform in a roaring rally over the last Thursday and Friday also stayed on the back foot. Shail, are the bulls really getting tired after the 7-week run?
Good morning, Sakshi, and a very warm welcome to thousands of viewers who are now joining us regularly for this fantastic market today on Business Today Television. I would imagine, Sakshi, there are all signs that the market is likely to consolidate from these levels. As you've mentioned, a very, very sharp run-up over the last, 32 trading sessions, which is, of course, 7 weeks. And out of those 7 weeks, we've added somewhere like 2,600 points on the Nifty, which is in the vicinity of about 13%. A very, very sharp run-up has happened, Sakshi. And there are all signs. You know, there was a lovely statement by one of the top fund managers globally, which said that the Dow Jones index seems to have run up ahead of expectations of a rate cut in the US market, which is most likely to happen in March. Be that as it may, stocks and equities and indices have this habit of moving ahead. There are all signs apart from fatigue in the market as far as long positions are concerned, that the government is now moving extremely nimbly to control price rise ahead of the general election. As you would know, last week there was a tweak in rules governing sugar and ethanol because sugar prices of this were rising in the economy, and that is not something which any household will appreciate. After that, there has been a move towards controlling prices of rice. Again, a staple across North India and most parts of South, East and West India. So these are all signs that the government is now taking steps to actively manage the pricing environment of all basic communities. They've started with food, Let's see whether they move towards steel or cement or not. But to my understanding, I think we've had a fantastic rally, and this is a time to pause, this is a time to reflect, this is a time to look deeply into your own thought process and understand that everything, the moment you touch it, rises 11%, 7%, 10%. There are huge volumes in mid caps and small caps. I think it is sensible to somehow take some positions of at least trading longs, and then probably wait for a better opportunity. As you know, Sakshi, the market has now been running up on what is likely to be the budget. The budget will be a vote on account because we are in a national election year. So I would imagine that everything is baked into the price at 21,500, 21,400. There is a moment of sanity which needs to prevail. And of course, all dips should be purchased, but I think this week will be a phase of consolidation. When it comes to the support on the options chart, 21,300 emerges as a very, very strong support. And IT is something that is likely to continue because the techs rallied very sharply. We've been watching very closely TCS, Infosys and HCL Tech. We'll keep an eye out for them, Sakshi.
Absolutely, Shail. And now let's talk about the Nifty Bank now, which actually underperformed the Nifty on Monday. It ended below 48,000 mark as well, also near the lowest point of the day as well. But it's also the weekly options expiry for the Nifty financial services contracts as well. How do you think this expiry will pan out for the banking and financial stocks now, Shail?
Sakshi, I would again, think in terms of a pause. You see, the Bank Nifty has appreciated somewhere like 7.8% in the month of December alone, and we are at 19th of December. That's a rally worth somewhere like 3,400 points. So again, I would imagine there is a pause. You know, a lot of sensible fund managers, Sakshi, in the PMS space have stopped inflows. And that's because they feel that the market for the moment is temporarily overheated and there is no point to putting in money. Look at how QIPs are subscribed. Look at how IPOs are listing. Look at how subscription levels in the IPOs are there. So these are all signs that market seems to have run up ahead of the extremely bullish expectation as well, and then probably this is a time for some introspection in terms of valuations. So it's a constructive approach. If there is an opportunity to buy in terms of relative valuations, of course money will come in, but for the moment I think both the Nifty and the Bank Nifty will consolidate. And what is really interesting is that both options chains for Nifty and the Bank Nifty are a bit bearish as of now. 48,000 is a very, very key resistance for the Bank Nifty. Support is at 47,400, 47,300 as far as the Bank Nifty is concerned. But Sakshi, overall, as far as the overarching theme of the market is concerned, the medium term trend remains bullish. We are looking at 22,000 on the Nifty Bank, and we are looking at 50,000. We are looking at 22,000 on Nifty and 50,000 on Nifty Bank in the medium term. Those targets remain on charts, but for the moment, maybe some piece towards the long side. We'll make the rest.
Right. In the F&O space then, Shail, any particular stocks that you would have your eye out on today?
So Sakshi, I am looking at trends where you are seeing a lot of short covering instead of long build-up. Again, it's the bears that are pulling back, and those are visible in two counters. We had discussed Steel Authority yesterday. This 3.4% rise, almost a 4 rupee rise to 115.65, came on decrease in open interest, which is a fall of 6.1%. Now, metals, as you know, have been shining because a rate cut globally boosts commodities, and that is something which traders have latched onto. So Steel Authority of India, which is already showing a multi-year breakout, actually it's a decadal breakout, that is something which is on my radar. And again, like I said, Balrampur Chini, the same thing, 4.3% decrease in open interest accompanied by a 15 rupee rise in stock price to 400 rupees. that's a 4.1% jump. And the fact that the government to some extent partially rolled back its very strict rules governing usage of ethanol is one reason that sugar stocks have started to breathe again. But remember, the government is watching. Any rise in price will be met with a very stern hand. Sakshi.
Absolutely. Then let's look at what are the global cues really telling us. Well, the Wall Street continued to build on the 7th straight week of gains. The S&P 500's longest weekly winning streak since 2017. We did see even the S&P 500 now about just 1.2% shy of its all-time closing high amid growing optimism regarding the policy rate cuts in 2024. A forward that the Fed policymakers also attempted to rein in on Monday as well. Now, the Dow Jones Industrial Average held steady. S&P 500 gained about 0.45% in trade. Nasdaq added about 0.6% in trade yesterday as well. Following the enthusiasm, the Asian markets did open higher, but then we saw mixed trading right ahead. We did see ahead of the Bank of Japan's rate decision and the minutes of the meeting from Australia's central bank meeting as well. So you do see the Nikkei and the Kospi up slightly higher, and the Hang Seng and the Shanghai lower in trade, with the Hang Seng down about 0.9% as well. The GIFT Nifty indicating a muted to a negative start in the Indian markets as well. Now, as far as the flows are also concerned, remember, with the year drawing to a close, we're now seeing institutional participation also starting to dwindle. Foreign investors had a minor sell figure on Monday. FIS sold about 33.5 crore shares, while the domestic institutional investors bought about 413.8 crore worth of shares in yesterday's trading action. Now, as far as some of the stocks are concerned, you need to keep an eye out on Nestle first because FMCG giant has now announced January 5 as the record date for their earlier announced stock split. In October, the company's board had approved a stock split in the ratio 1:10. And that will be keenly watched out by investors. So the stock will be in focus. Sun Pharma has said that it's entered into an agreement to acquire about 16.7% shares on a fully diluted basis in Lindra Therapeutics for $30 million. So in the spate of acquisition, Sun Pharma will be in focus. Vedanta has declared second interim dividend worth 11 rupees per share for the fiscal year 2024, resulting in a total payout of 4,089 crores. The parent will also get a payout of 2,065 crores as well, which means half of the entire payout too. Now, when we talk about Devyani International, that's foraying into Thailand. It's going to be acquiring 274 KFC restaurants in Thailand, marking its foray into the country's QSR market as well. That stock would be in focus. KPI Energy, Green Energy, that's launching a QIP to raise funds. Floor price 1245 rupees is a 9.2% discount on Monday's closing price. PNC Infra, that's going to be in focus. Positive news right there. The company has been declared lowest L1 bidder for a highway project in Madhya Pradesh as well. So those are some of the stocks that I will be keeping an eye out on. Shail, what else would you be watching?
Sakshi, one point you mentioned which slipped my attention was, of course, the FII number, although it's a minor minus 34 crores. But remember, this comes after a very long series of buying spurts, somewhere between middle of November till so far. Somewhere to the vicinity of say 40,000 crore rupees has come in, and the fact that most foreign funds and fund managers go on a holiday from say 20th of December till December 31st, first week of January, is already one of those signs that consolidation in the market is underway for the next 5 or 7 trading sessions. Be that as it may, as you mentioned in your headlines, trading action will continue in a lot of how should I say, high beta, low ticket items. Sakshi.
Absolutely. Another very positive news for India coming in from IMF, and that's something that we will be keeping an eye out on. IMF, in its latest annual Article 4 consultation with India, has mentioned that India is a star performer, contributing more than 16% of global growth as well. So another mark of affirmation coming in from the global fund major IMF. They have actually said they've been observing for quite some time now that India has been growing at a very robust rate. It's one of the star performers when it comes to real growth. When we look at the peer countries, they've also mentioned that it is one of the fastest growing large emerging markets, and it's contributing in the projection 16% of the global growth as well. It's on track to be one of the fastest growing major economies in the world this year as well, is what IMF has also mentioned. So these will be important points to consider as well. Apart from this, there'll be another point that one should keep an eye out on, as the Union government will also be launching the 9th round of commercial coal mine auctions on December 20th. That's tomorrow. The Ministry of Coal has announced as of yesterday, so that will also be in focus. Shail?
Yes, and when you mentioned about the IMF part, Sakshi, this is of course very good news, but all seems to be baked in the price. Remember, this comes after the Reserve Bank of India has raised its GDP forecasts in its previous monetary policy. The fact that a lot of how should I say, macro and quick indicators for the economy are doing pretty well, which is electricity production, which is GST sales, which is e-way bill number, which is how goods are moving within states. So all that seems to be baked in the price. But again, like I said, this is good news. It's welcome. Let's keep it in our pitara of good news, and then we'll use it whenever we wish. I believe Dharmesh Kant ji is through. Let's introduce him on Market Today. Head of Equity Research at Cholamandalam Securities, Mr. Dharmesh Kant joins us. A very sane voice in this kind of a roaring bull market. Namaste Dharmesh ji, a very warm welcome to you, sir. How do you see the sentiment on Dalal Street, given that Monday has seen a bit of a profit booking happening after a sustained 7-week rally? What are your thoughts?
Yeah, Namaste Salji. Good morning to all. I mean, Sakshi and entire viewers out there. See, market has been on its own. I mean, the momentum has been very high. At the same time, the momentum is driven by the liquidity. So sentiments are like a strong positive, and the people are not seeing this market from a 1 year or 2 year perspective. What they are looking forward to is more of a 4 to 5 year kind of a horizon. Just to give you an example, the kind of queries we are getting is, if a company is earning 100 crores now, don't tell us 15-20% kind of a growth. Just tell us in next 4 to 5 years, what would be the profitability of this company? Will it be 400 or 300 crores? So that is the kind of market. So liquidity will keep on flowing in. I mean, valuation wise, we are in the midst of a valuation basket. I mean, 10% up or 10% down is very much on the cards. So any negative news flow in this kind of a market may lead to that kind of a correction. At the same time, as long as there is no negativity, the sentiments are the way they are, then 10% more up from here, then only we will get into a bubble zone. Till that time, I don't think there is any negative flow in the market.
Right. Good morning to you, Mr. Kant, and thank you so much for taking the time out. Good to have you. Tell us which will be your top 2 stock ideas that you will be picking out for today.
Yeah, good morning, Sakshi. I mean, that's the toughest question to answer in such kind of a market, because a slight error can lead to a negative day for any stock. My own sense is today would be a negative day for the market. So we won't be ending in green. That is what I feel, going by the way market has been behaving. Having said that, even if you want to buy in such kind of an environment, I think Reliance Industries offers a good buying opportunity. Any correction should be bought into, and that has been a laggard compared to overall basket. So that is one stock, and the other stock is from the railway infra segment, and that would be more of to do with RVNL. So RVNL and Reliance Industries should be bought into corrections. I don't think today one should be chasing the green tick. So as long as stocks are trading higher, let it trade, be on the sidelines. If you get an opportunity on a correction, there is an opportunity to buy.
Okay. Reliance Industries and RVNL, the top two picks that Mr. Kant will be going with in an otherwise what could turn out to be a muted day of trading action as well. But Mr. Kant, like we're approaching the new year as well, what would be one or two key themes that you're betting big on for the new theme? Somebody's now garnering funds to deploy for the new year. How should one be placed and where should one's focus be?
Yes, okay. I mean, the themes are the same. There is no deviation from where it was 6 months back. That was the infra space has been doing well, power space has been doing well. At the same time, infra-related ancillary segment, automobile segment has been doing well, auto ancillary is there. So these are the segments which has been doing well, followed by cement. What has been added onto this entire theme was the IT stocks. So IT pack, we initiated a good long coverage 2 weeks back, and thankfully it has run up too fast. I mean, almost 8 to 9% kind of index move has been there, and our basket has gone up by 10% over these 2 weeks. So right now, I think there will still be steam will be left there in IT stocks. So any slight correction happening out there, one should be buying into it, and this is likely to continue till the earnings start rolling in. Thereafter, it will be left to the management committee in how they perceive the US environment going forward. But till that time, I think IT stocks will keep on garnering pace, and their LTIM or LTTS, TCS, Infosys remains our top pick out there.
Okay. All right. We'll take a very, very short break right now, Mr. Kant. When we return, we'll discuss more stock ideas and more sectoral information with you. So stay with us, viewers. We'll be back in 30 seconds.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back on Market Today. This is a wonderful Tuesday morning, and we are waiting with bated breath for pre-open trades to come in. Remember, there is a slight downtick on the GIFT Nifty, down about 12-13 points. The Nifty itself shut shop 38 points lower, 21,418 yesterday. There was a 275-point downtick on the Nifty Bank at 47,870. The cues from overseas for today are mildly muted and towards the sideways side. We'll probably see a nice bout of consolidation happening. Dharmesh ji is with us. Dharmesh ji, your view on the kind of rally that we've seen in tech stocks, especially TCS. Are they still valuable at current levels? Would you take a long side punt on them?
Definitely, yes, Shalji. If you look at the fundamentals of TCS, there is nothing wrong. The company earns 45-46% of an ROE. And even if it delivers a 15% kind of a growth, so it can be valued at 25 to 30 times P multiple 1 year forward. So that's the band at which TCS should be trading. Why it was not trading at higher multiples was just because of the fact that the spends were getting lower and the projection for the upcoming growth trajectory was getting a bit murkier. But I think from Q3 onwards, the commentary will be again back. Last quarter, in fact, they said $9 to $10 billion kind of order inflow is likely to be the run rate, which I think will be in for an upward revision. And TCS was the only company in the large cap basket where they came out with better EBIT margins. Others were showing a decline out there, but they were able to give around 100 basis point kind of a hike was there on the margin front. So that trend is likely to continue. And I think with the kind of environment we are getting into with the US, around 28, 29 times PE multiple should be there on TCS. So at least 15 to 20% kind of a stock wise upside for calendar year 24 is very much expected from TCS.
Okay. We'll also take a view from Soni Patnaik. She joins us from JM Financial Services. Very good morning to you, Soni. Any two top calls that you see working very well on technical charts today, which you can share with our viewers?
To all. So definitely the top two picks. The first would be granules. Granules, we believe that there'll be a fresh technical breakout above 406 level. So that would be a weekly breakout. So you can buy. If that happens, you can enter granules with a stop loss of 395 and keeping a target of 430, 435. Additional to this breakout, yesterday it has also seen 4.3% aggressive long build-up positions. So I think both the data is quite positive for granules. And the second pick would be in State Bank of India, SBI. So SBI, we have seen it continuing in that 52 weeks high, and it has given a very good breakout above 630 levels. So continue to buy or accumulate SBI anywhere in the range of 645 to 650, keeping a stop loss of 625, and for targets of 690 to 700.
Okay. Ladies and gentlemen, we have pre-open rates in front of us. The Nifty is vacillating between very high gains and decent gains. At the moment, 66 points higher, 21,470 for you. Let us see what is ticking and ticking strongly. Well, it's a sea of green. TCS, 1% higher, 3,900 in front of you. Infosys, 2% higher, 1597. Trust me, these prices will settle sensibly. ICICI Bank 1.7% higher, 1039. I want to see what Reliance is doing. Absolutely flat, doing nothing, 2521. How about HDFC Bank? This is a pain point, but this price will improve. Nevertheless, let me mention it. Minus 3.5%, 1597. Prices will get sensibly in terms of values. The Nifty is now completely flat, 21,419. Let's look at the FNO space, minus the index heavyweights. Z Entertainment is down the first circuit, 10% lower, 252.45. News coming in that the company has requested its future partner, Sony Pictures, to extend the planned merger date. Let's see what happens. But for the moment, it's a 10% downtick on Z Entertainment, 252 for you. What are the other prices? Okay, we have Gujarat Alkali at 749.35, down about 2%. We have a cut coming in on KRBL. Remember, today rice stocks will be in focus because the government has moved aggressively to put a sort of an invisible, how should I say, pull towards raising prices. So KRBL is down 1.4%, 358. JK Cement is 1.1% lower, 38.81. Let's look at some other stocks which are moving in that direction. Okay, let's look at top gainers in FNO, which is 1 second please, I have the wrong window. IDFC 5% higher, 130. Sun Pharma, as Sakshi has been pointing out, this is a stock now at record highs, 1290 in front of us, 3% higher. We have Torrent Pharma, 1.7% higher, 2179. Biocon, Zydus, Metropolis. So Sakshi, today is going to be a pharma day. Let's also look at NSE 500. Devyani International, transaction worth 200 restaurants in Thailand, is very well appreciated by the market, 8% higher, 198. We have IDFC First Bank, 3.6% higher, 93. We have Vijaya Diagnostics, 632.4% higher. So nice movements coming in. Let's get Dharmesh ji and Soni back into the conversation. Sony, coming to you, your view on the Nifty for today. At the moment, 78 points lower, 21,340. Are these the signs of consolidation on way?
Right. So, Shell, if I look at the aggregate structure of the indices, does not concede a very wide variation, but rather just a possibility of two scenarios. I think today would be one of the scenario where a buy on a small corrective dip actually works out. Because if we look at 21,300 and 21,200, these are both the strike prices where the put writers are very dominant. Because of the put call ratio for these strike prices, they are comfortably above 2.5. So, it is just confirming that the put writers will defend this level in case of any corrective dip. So I think any small intraday dip that we can see, it is better to enter into. Nifty has formed a very good, strong base of 21,000. So as long as the 21,000 is defended in short to near term, Nifty will consolidate. It's just taking a breather, and it will find places where the corrective dip works out. Then again, after the breather has been done, it will start rallying towards 21,600, 21,800 for these maybe last part of the series. So the undertone of Nifty and Bank Nifty both, they are still quite bullish. So it's just to look for opportunities to enter on dips.
Okay, good morning, Sony. I wanted you to talk about a little on the pharma stocks. Of course, another trigger for the pharma stocks could also be that the government has issued guidelines amid JN.1, the variant of Omicron concerns, because there's a global surge and Singapore spike as well. Talk to us about which are the stocks that you would be watching out for here in the pharma space. Of course, we have specific news flow coming in on Sun Pharma with the acquisition of Lindra Therapeutics of 16.7%. Biocon talking about its biosimilars merger as well. Talk to us about which are the top stocks on your pharma radar.
It's a Sakshi. I think the top stocks in pharma would be one that I've already mentioned, Granules. Like I've already given the levels. The other two stocks would be Zydus Life. I think Zydus Life has also confirmed its breakout yesterday above 660 levels. And it has seen very aggressive long build-up positions of almost about 11% during the day yesterday. So Zydus Life remains a top pick. Anywhere close to 670, it gives you that space to re-enter. 660 remains a very good support, so you can place a stop loss of 660 and targets of 720 to 730 for Zydus Life. And so that remains a top pick. Apart from these two, Sun Pharma, as you rightly pointed out, even Sun Pharma has seen good short covering yesterday, and it is looking quite robust to take out higher levels of 1300 plus levels soon. So you can even look for Sun Pharma's trade, keep a stop loss of 1240 for the day and targets of 1300 to 1320.
Okay. Mr. Kant, your top pick from the pharma space?
Yes, actually, we are avoiding pharma because of the valuations at which they have been trading. And last 2 months, it has played out. There has been intermittent rally in pharma stocks, but none of these companies have taken out the rise. I mean, the only outlier can be Aurobindo Pharma and Sun Pharma, where the numbers were pretty good. But other than that, the numbers were quite, haphazard kind of numbers were there, and they have been pretty volatile of late. So I think pharma, you can have a trade for a day or two in a negative market, but otherwise, a trending perspective, a long term, I don't think there is any valuation gap left out there.
Sakshi, there's no let up from the side of bulls. Remember, the index was down 78 points just a couple of minutes back. Now it's up 60 points. So it's a seesaw. The battle between bulls and bears is at 21,400, 450 today. Let's see who wins. But in the end of the day, I'm sure investors will be rejoicing this opportunity. Whether the index moves higher from here or lower from here. If it moves lower, it essentially means that smarter guys are booking profits and they're welcoming new set of investors and stronger traders into the market. To you, Sony, we've discussed one very, very strong pharma stock, Sun Pharma. Within the IT space, which has shown extremely high traction on Friday and Monday, what are the one or two stocks that you like, mid cap or large cap? Your pick.
So the first pick would be from the mid-cap space. It will be Birla Soft. So B Soft, it has been continuing in that uptrend. even crossed a resistance of 700. So 700, as per the options chain, I can see is becoming the new base. It's in good support. So anywhere closer to 715, 710 would be a very ideal range to enter in Birla Soft. Place a very small stop loss of 700, and you can see targets of 740 to 750 odd levels. So I think Birla Soft remains the first pick. The second pick would be from large space, which will be Wipro. Now, Wipro recently we have seen it, giving out that consolidation breakout above 430 level. So even at yesterday's bit of choppy mixed sentiments in IT, we saw that Wipro sustained above that level. So keep a stop loss of 425 for short term in Wipro, and targets should be 470 to 480.
Okay. Right.
Okay, these are very sensible stocks that Sony has marked as far as the tech space is concerned. Remember, record highs on Birlasoft, which she's chasing, and less than satisfactory valuations on Wipro compared with the move that we've already seen on TCS and Infosys. Some problems there, but it is in problems that you buy decent stocks which give you supernormal returns in the short time as well. Your top pick in the metal space, Sony.
The metal space, we feel that will continue to outperform. I think a lot of stocks that we can see are doing rather well. The first pick would be NMDC. So NMDC is also showing a very good strong support, forming around 190 as per the options chain data. So 190 becoming the base, it will definitely try to take out its resistance of 200 and 205. So NMDC remains a good buy from current levels. Place a stop loss at 190 and look for targets of 205, because the moment it crosses that resistance, you will see very sharp short covering coming in NMDC. It becomes a bit of a positional play, but that's how the first pick has come out for NMDC. The second pick would be Tata Steel, where we have already witnessed that breakout taking place above 135. So Tata Steel becomes a next pick in the metal space counter. Very small stop loss. Risk reward ratio is very favorable. 134 is the stop loss, and targets of 142, 144.
Okay. Sony, your view on Apollo Tyres, there's been a block deal as well over here. I think about 3.6% equity has exchanged hands, 2.3 crore shares have exchanged hands right here on Apollo Tyres, 2.5% higher right now at 464. It's settling in the pre-open trade. How would you look at it?
So Apollo Tire, there is a resistance of 470. If we look at where the maximum call writers are still positioned, they have not exited the position. So it becomes quite imperative today to watch how these writers are behaving, with the gap up opening. So if in case they're exiting the position, there's a chance that Apollo Tires will take out the levels of 470 and head towards its next resistance of 490. So that's how Apollo Tires is placed. On the downside, I can see that 450 is giving you an immediate support. So, that we could also look at it another way, that if 450 holds, it may be sideways for the day. Any movement above 470 where the resistance is crossed, then you can look to for, heading towards 490 odd levels.
Okay. One more stock I'll take with you, and that's Devyani International. Like we were talking about, the news flow is foraying into Thailand. 4.5% higher. Would you take a trade here?
It's Devyani International on technicals. I can see that yesterday was not a very strong candle. However, today's gap up opening is indicating somewhere close to 192. Now, whether it is able to sustain 190 and does not fall below 190 for the day, technically we can say that that should be your intraday's main support as stop loss. So if 190 holds, then it will look to take out higher levels of 198, 198.5, where there is a small resistance. Now that remains your intraday level, 190 on the downside, 198 on the upside.
Okay, let's look at some more prices. We are at 9:12 a.m. and let's see how some other stocks have sort of ended their pre-open session. I'd like to point out Ireda, this is 2% higher, 113. Bama Lorry, 1% higher, 194. And of course, we have a decent uptick coming into ONGC 1.5% higher, 202. Let's look at what is buzzing in defense. That is because yesterday we saw a record high on Bharat Dynamics. We saw a record high on BEL. The top gainer for today in the defense space is BEML, 0.5% higher, 25.79. Amongst the most high beta spaces, let's look at what is moving. It's Paytm, 1.3% higher, 623. We have Policy Bazaar, almost 0.8% higher, 807. We have Tejas Networks, 0.7% higher, 844. And we have, how should I say, Ambuja Cement, 0.5% higher, 528. This is how the market is moving at the moment. Let's get Dharmesh ji into the conversation. A strong upticks on the IT space. Birla Soft and Wipro are technical outperformers according to Sony. Where would you put in your money in the mid-cap space? Is it still viable in terms of a long-term punt here?
Yeah, I mean, in the mid-cap space, ITIM is one counter which looks pretty good and poised to have the synergy benefits of the merger with Mindtree. And going forward, even LTTS, as the guidance was there earlier from the management, is likely to be merged into the same. So now it's getting into a bigger, larger company. So the transition from mid to a large cap space is where the juice lies for LTIM. And there I think still attraction is high. I mean, 6,500 it would be the fair valuation for the company, considering the fact that synergy benefits will play out. So that is one counter where I'm looking forward to. Others are looking expensive currently.
Right. The market is opened, ladies and gentlemen. It's an 18-point uptick, 21,435. The Nifty Bank, remember, is on T-1. It's opened 56 points lower, 47,800. The IT index is opened a shade lower, 40 points, 35,637. Now let's see whether this is a one-off, whether the dip will be purchased or we'll see some profit booking here. Remember, the day's high for the Nifty is 21,480. This was the first resistance which has not been taken out. So a bit of selling pressure coming in. Reliance, 0.6% higher, 25.39. What is HDFC Bank doing? 0.5% lower, 16.47. What is Infosys doing? 0.33% higher, 15.69. How about the other two banks? ICICI Bank flat at 1,022. What is Axis doing? 0.5% higher, 11.17. The Nifty now 21 points higher, 21,440. Immediately we'll shift focus to NSE 50. I want to see what is the FNO doing apart from index heavyweights. Okay, ONGC 1.8% higher, 20265. I'm marking Nestle because there is some news of a stock split. 1% higher, 24,575. FNO stocks immediately. Sakshi marked Apollo Tires. It's running away. It's broken its resistance. 7% higher, 482. Dixon Technologies 2.3% higher, 64.19. What else is moving? We have Biocon 1% higher, 255.85. Granules, Sony picked this up, 1% higher, 405.35. A very quick view on NSE 500. What is gaining? Apollo and Devyani. These are both news led. 19 lakh shares on Apollo. Remember, this is a block deal that has happened. A lot of stake changing hands. Let's get Sony into the conversation immediately. Sony, your very quick view on Apollo Tires and Devyani International. These are news driven.
Right, so I can see that Apollo Tire definitely is trying to break that resistance, and it is looking good, and it is crossed also. So I think it will sustain above 470. It becomes your immediate base. Although the call writers, the data has not yet been refreshed in NSE till now, but we'll still go out on a limb and say that if 470, 465 band is protected today, it will look forward to regaining that 490 plus level. So I think it's still bullish as of now, and look for the levels, and we'll just watch how the options data built up during the day.
Okay, Devyani is taking it away, 196.75. Good block deals. Your view there, Sony?
So Devyani, like I said, 198 remains that small hurdle. Most likely, with the type of volumes building up, it can take out that resistance. The moment it's taken out 198.5, technically it closes above that. You can see further, targets of 213 to 215.
All right, let's look at the entire pharma pack on the Nifty. We can see Sun Pharma moving higher by almost a percent. It's at 1264 right now. We also have Cipla now half odd percent higher in trade, 1222 coming in on that one. Dr. Reddy's at 5623, 0.6% higher in trade as well. So those are some of the healthcare stocks that are moving up in trade. Let's look at some more stocks. Torrent Pharma now the top mover in the F&O space. 5.3% higher. Sony, your thought on Torrent Pharma, how would you trade after this 5.3% surge in F&O space?
So if I look at Torrent Pharma, it's looking quite strong as of now. Like the entire pack is good and it has crossed a resistance of 2120. It's closed above it. So definitely Torrent Pharma is looking good to take out 2200 resistance, and above 2200 it can surge towards 2240. So these becomes your target. On the downside, as long as 2150, 2140 as a band is defended, I think you can still place your stop loss at the 2140 and look for targets of 2240.
Okay. Mr. Kant, would you look at fresh on the pharma names that are moving up? Anything that strikes you? Metropolis Healthcare, that's now at 2.2% move on the upside at 1655. You're also looking at this entire diagnostic chain stocks that are moving up. So Dr. Lal Path Labs is up by 2%. We also have Divi's that's up in trade. How would you look at all of these stocks, especially in the diagnostic spaces, sir?
This is actually what is happening in the market. It is all about liquidity. There are two, three new fund launches out there, which is particularly aimed at into the mid caps and small cap segment. So most of these diagnostic space company and the other pharma companies, apart from the large caps one, fall into that bracket. Even the QSR segment like Devyani and all we were speaking about. So in such an environment, I mean, investment buy becomes very difficult. Yeah, momentum play is always there. As far as momentum play is there, one can keep on playing the technicals. Fundamentally, I think it's almost applies to perfection for most of the pharma companies, including the diagnostic space and the hospital chains.
Okay. Mr. Kant, you mentioned RVNL, and RVNL is moving higher in trade right now. At this point in time, if we look at RVNL share, it's moving up almost 1.4% higher at 185 odd levels. Even IRFC, that's among the top movers in the Nifty 500 basket, almost 4.5% higher at 98.5 odd levels coming in on this one. Talk to us about the entire railway space, Mr. Kant. RVNL was definitely your top pick and that's moving higher. How would you be positioned here in the entire space?
It has to be a buy and investment buy positioning in the railway space, be it IRFC or RVNL. The reason being when the last budget was presented, so government was very clear on sounding that next year onwards there will be 25% hike in the budgetary allocation for railways. So that amount is around 1.25 lakh crore rupees kind of additional flow will come into play. A few days back, Railway Minister has said that Railway would be ordering coaches worth rupees, 1 lakh crore. So that's the kind of entire spending is happening into the railway space, be it railway coaches, be it technological upgradation, or be it, further laning of railway tracks, bullet trains, and everything is coming up in a very high speed. A couple of days back, CTC came out with an announcement where they are tying up with Ola cabs for commutation of passengers after they get onto the station to the house destination. So these are the value chain system which in the entire railway is creating. And at the same time, if you go for bookings, you don't get tickets booked easily. There's a waiting list for at least 25 to 30 days. So that's the kind of traffic this entire segment is witnessing. So I think all the companies which are catering to the railway infra space are likely to do well. For RBNL, our target is around 230 to 240 from a year's perspective. That is where we would take a relook at that. Till that time, we would be buying all the debts. And IRFC, it just goes into railway finance for all the infra projects, also a very good bet.
Okay, Sakshi, I think we need to mark Nestle and also take a view from Sony on this one. Jan 5th has been marked as the record date. It will be a stock split of 10:1, which means if you have 100 shares of Nestle, if you're really lucky, then you'll have 1,000 shares of Nestle. But at the moment, this is really moving, and I know this is a high ticket item, Sony, but would you sort of make a guess where this is headed? Kit Kat for you, and then Maggie.
Right. So I can see that today just with 6 minutes of hope, 6 minutes of opening, Nestle has already added 1% of long beta position. So it means that today would be a day where you see fresh longs getting added. So positions are being
Correct.
added. I can see that the support is 24,600. So if 24,600 on immediate basis is held during the day, it will definitely try to head towards 25,200, 25,400. So this becomes your range. I think it's a good play. Risk reward ratio is favorable. A small risk can be taken into buying it at current levels, placing stop loss 24,600 and targets 25,200, 25,400.
Okay. The other stock I'd like to mark within the Nifty space is a high beta, low ticket item, Coal India, up 3%. Sony, to you first, and then we'll get Dharmesh ji's views as well. But at the moment, 350, 360, and a nice uptick on this one after 5-6 days of complete peace. Let me just see what the open interest is doing, and then over to you. It's a short covering, so this is really good. Over to you, Sony, Coal India.
Yes, so Coal India, it is looking good. However, there still remains a resistance of 360 on the upside. So as long as 360 is not taken out decisively on closing basis, the max that it can rally from current level is still that level, 360. So I think 360 remains a crucial resistance. If it's able to take it out, we can see it further rising towards 370 plus levels, like 370, 374 can be seen on immediate basis. On the downside, however, the protection is at 345 base. It is a very good strong base, so it may consolidate between 345 to 360 for some time, until either side of the range is broken out. The bet would obviously be on the higher side, since there's some short covering seen today. So if 360 is taken out, you can enter into the stock for 374 target.
Okay. Right. Sony, I'll take one more stock that's now moving as the top mover in the F&O space, and that's Delta Corp. It's now 5.8% higher in trade. How would you look at Delta Corp? It's right now at 151.
Yes, so a bit of a sensitive stock. We've seen a lot of wild movement, but today, of course, with 500%, sorry, 5%, it has moved 5 to 6%. I can see long built-up positions also adding up, and there's a very aggressive build-up that I can already see, which is crossed 10%. So this is very aggressively that people are trying to probably place their support at 100, and I can see technically 148, 144 is a band where I can see a support trying to be a new base. On the upside, sorry, I can see that 160, 162 is still a resistance hurdle. So at best, from 144, 145 support, it can go towards 160. And if it's able to take out that hurdle, close above it, then maybe you can see some further more movement coming towards 170 plus levels.
Okay, got that. Mr. Kant, I'll take your view on the banking space now. Of course, we're looking at the private banks slightly lower in trade, and the Nifty Bank also lagging behind. But we're looking at IDFC and IDFC First Bank picking up pace amid the merger approval that they've got from RBI as well. How would you look at these two stocks?
Yeah, IDC First has been growing very steadily, and the management is very robust. And the good part is whatever Mr. Vaidyanathan has promised earlier, they have delivered on those lines. In fact, they have delivered more than what was being promised. So I think that trajectory is likely to continue. And it's a very aggressive management, and I have been tracking this company for 10, 12 years. So there is no doubt on the consistency of the growth. Around 25-30% kind of a profitability growth is likely to be there with the good asset quality in place, because they are also very good on the technological side. and they have been implementing the latest technologies very fast. So I think with this merger happening, there's nothing more juice left for the from the merger perspective. But just playing on the business side and how things are shaping up, I mean, it can be multiple re-rating can happen to this bank. And for 2 to 3 year kind of a time horizon, the upside target is 200 plus. So that is, we are seeing this as a doubler. So we have been recommending stock way back. I mean, 38.40 was where we started this, and we think 200, 210 is the likely target from FY26 profitability numbers.
Okay, let's again mark stocks. We are close to the first 15 minutes of trade. The Nifty has managed to hold on to its initial small part of gains, 16 higher at 21,435. Now, two very important things have happened. One is that it's taken support at its pivot level, which is 21,420, and it's unable to breach its first resistance, which is 21,480. So this is a 60-point range in which the first 15 minutes have passed. But broader theme is that a very strong move is coming on the entire railway pack, which is RVNL 185.50. Let me just give you the percentage rise as well on this one. This is Sakshi who had marked it earlier, 1.4% higher. IRFC is 3.8% higher, 98.90. I just wanted to see what the other very strong high beta counter IREDA is doing. 2.8% higher, 113.85. Let's look at all-time highs here at the moment and the lower ones. So IRCON, now this is interesting. Let's take a view on IRCON from Sony. 180 almost, 1.4% higher. 81 lakh shares have been traded. This is blue sky territory for IRCON Sony. Any view that you can share with us?
So IRCON technically looks quite strong. I can see positive divergence coming in MACD and RSI both. And technically also it's looking quite good. There's a weekly breakout trying to happen above 180. So it's just at the cusp of that 180. Now if 180 is sustained on closing basis today, it will definitely rally towards 190, 194 levels on immediate basis. On the downside, it's got a good support of 170. So you'll have to place your stop losses closer to 170 and look for targets of 194.
Okay, I am again mentioning a smart move that is coming in the pharma space, and this time it's in the hospital sector. I know this is high ticket item, but what can be done? भाव भगवान है और जो है वो आपके सामने प्रस्तुत है. 56.54. Now this is a very strong move. Sony, your very quick view on Apollo Hospitals. This is a low of 5,500 and now 56.66. So it's a strong up move. What would you say?
Definitely, I can see it's trying to take out. I think there's a fresh breakout coming in today. RSI has turned positive today. MACD is just on the verge of turning positive. So both are giving you that good bullish indication. The breakout will get confirmed above 5,700, which most likely it is ready to take out. So any move above 5,700, it can move towards 5,780, 5,800 levels. So I think it's quite well placed. You can wait for the breakout to happen. On the downside, 5,600, 5,610 is a level which is a base support. So place your stop losses at 5,610. Wait for the breakout to happen above 5,700. Then you can buy for targets of 5,780, 5,800.
Okay. I wanted to take Mr. Kant's view on the entire FMCG space, because the Nifty FMCG is now picking up pace apart from the heavyweight counters like ITC that's now up by 0.7 odd percent. I'm also, and of course Nestle that we've already marked because of the news flow. We're also looking at the smaller ticket FMCG items, Varun Beverages, for example, it continues to soar higher in trade. It's now among the top 50 large companies in India too. We're also looking at Tata Consumer Products, 1.5% higher in trade. Godrej Consumer, 0.5% higher. How would you look at this entire FMCG space, sir? Large caps versus mid caps, the new and upcoming stocks versus the traditional heavyweight counters, and how would you advise investors to put in?
I would be advising traditional heavyweights to go forward too, because this space has been quite a bit laggard for last 1 month or so when the market has moved up significantly, and ITC, HUL, they didn't move to that extent. In fact, they were consolidating, or some profitability shift was happening. I mean, people were booking out here and shifting to IT or banking space. So that shift is over now. I think this is a time where again some margin of safety kind of trades and investment buys would be taken up by the market participant. And there I think HUL stands a very good bet. So Hindustan Unilever with ITC will be the top picks out there, followed by maybe Britannia and Godrej Consumer. So these are the four counters where as a basket or thematic play can be done. And generally, before the elections, what you see, FMCG counters move up quite a bit because some spending happens just before the elections, and that is where the Hindustan Unilevers of the world find more traction. So this space is now becoming attractive from trading and medium-term investment perspective.
Okay, Soni, your top bet from the FMCG space, which is the strongest counter on the charts right now?
I would agree with ITC on a positional basis. I can see that 445 is a support as per the options data. There is a resistance also at 465. So I think anything above 465 will confirm its technical breakout. It is consolidating in this range. So the moment it's above 465, it gives you that breakout. You can see it heading towards levels of 490 plus. So I think it's wise to wait for that breakout to come technically to enter. And look for targets of 490 plus levels, and 445 remains your immediate support. So if the support is broken, then I think it's better that we can wait for a bit more downside till 435, 430.
Okay, fair enough. What we'll do right now is take a very, very short break right now. When we return, we will continue to discuss more stock ideas as well. Meanwhile, I'll thank Mr. Kant for being with us on the show and discussing all of these strategies on stocks and sectors. Many thanks for being with us, but stay with us. We'll be back in a short while.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back to Market Today. The market is abuzz with very, very hectic trading activity. The Nifty is now flattened out completely, 21,411. This is a fresh intraday low. It has slipped below the pivot point, and remember, at the opening trades, it could not take out its first resistance, which was 21,480. So 21,480 to 408, that's a 72-point downtick. And let's see how the day pans out. Remember, yesterday's low is now what will be in focus, which is 21,388. And yesterday's close was somewhere in the vicinity of 21,402. Let's see how it moves. But that's the situation as of now. In the broader markets, it's the FMCG index followed by the pharma index, which are the two top gainers. It gives you an idea that money is moving after booking profit into defensives. Nestle is leading the pharma rally, a 10 for 1 split, which this counter will have on 5th of January, which is the record date. Hindustan Unilever, this is something which is at day's high 25.47. Sakshi, it essentially means we also need to look at ITC. So these are the two counters which decide the fate of the pack as far as the sentiment is concerned. ITC 0.5% higher, 454, and lever 0.5% higher, 25.47. Coming to you very quickly, Sony, on these two index heavyweights, but ITC first because it's a super high beta. Your view on ITC?
Right. So, just like I was trying to explain for ITC, so there is a sideways trend in ITC. On the lower side of the range is 445. The upper end of the range is 460. It is consolidating in this range, and a break of either side of the levels can only determine its further trend. It's looking good positionally, if you see that it's holding on to the support of 445. It just becomes a confirmative buy only when it has crossed that resistance and closed above that resistance, which is 460. So the moment 460 is broken, you can see for targets of 490 plus levels. So I think that's how one should wait in ITC for the levels to break and then enter for a long upside.
Okay.
Okay,
Right.
that's the view coming in as far as ITC is concerned. Sakshi, to you, a Kit Kat, Nestle, 24,810.
Yes, I think all the investors have been waiting with bated breath for years on Nestle. When will it come with a stock split so that they can actually own at least a part of Nestle and be, participant in the growth story that Nestle has displayed over the years as well. And 2% higher for this very, very heavy ticket stock, 24,855 right now, right ahead of its stock split right now. But Sony, from the Nifty 500 basket, Century Ply, firing away 8% higher. How would you trade the stock after this initial momentum?
Century Ply, of course, it's looking quite strong. There's good volumes happening, and the breakout had already come above 720 plus levels. So I think it's already quite high. Anybody who's already entered on lower levels, it will be advisable to trail your stop losses to 780. And for fresh entry, also, it is advisable to look for a small dip anywhere close to 800, 790 range, so that you can place your stop losses at 780, 775, and then again you can see it bouncing back towards 840, 860 levels. So it's better to wait for a small dip for fresh entry, and anybody already holding can trail their stop losses to 780.
Okay. Another space that's again buzzing is the shipping space. There is no stopping for this one too. Again, second day in a row this week, we are seeing Great Eastern Shipping Company 3.2% higher, Cochin Shipyard 3% higher in trade, Mazagon Dock also about 0.5% up in trade too. How would you look at this shipping stocks afresh, and any particular stock that looks now promising on the charts?
Right. So I think all the three stocks are looking quite promising on the charts. The immediate, focus goes to Cochin Shipyard. There is a latest today. I can see an RSI fresh. It's giving you a good positive momentum today in RSI. So it's a positive sign. So I think Cochin Shipyard with I can see the stop loss good base of 1270. So you can keep a stop loss of 1270. Look for targets of 1360, 1365 on the higher side for the day. So I think Cochin Shipyard would be a good bet. Risk reward ratio is quite favorable as well.
Okay, Sakshi, I think we'll mark the defense space because you started with Cochin Shipyard. I think there's hectic activity on BEML, and the reason why I mentioned this is 4 blocks of anywhere between 3,000 to 5,000 shares individually just moving on my screen. Sony, this comes to you. BEML, high ticket, what can be done, 2678. What does the chart tell you?
It's the chart is indicating that the positive momentum is to continue. I think it's still looking quite strong, at least up until 2720. So I think 2720 was the previous level from where we had seen some profit booking taking place. So it is definitely poised to head towards 2720. So it's a good buy even from current levels. I think one can even place a stop loss at 2640, 2630 seems a good base. At 2630 is a stop loss. You can see for targets of 2720. Moments it's able to cross 2720, it becomes a fresh breakout and a fresh rally altogether, heading towards 2800 levels as well. So I think these are the tranches one can look to book profits or trail the stop losses as and when the resistance of 2720 is taken out.
Okay, that's a view coming in on the defense BEML. The other stocks that are moving rapidly in this one is, of course, BDL, a bit of a profit booking here. But BEML 4% higher. Cochin we've looked at. Garden Reach is 1.5% higher, 847.25. Garden Reach and of course Latent View 0.5% higher, 475. The market dipping, Sakshi, and at the moment we've taken out. We are now heading for the first support level, which is 21,361. The Nifty is down 46 points, 21,372. The Nifty Bank is down 173 points, 47,700. IT index is down 333 points, 35,350. What is up, ladies and gentlemen? It's the defense of the market. The pharma index and the FMCG index. We are watching Sun Pharma, Cipla Granules, and we are watching Nestle, KitKat Maggie, and Hindustan Unilever and ITC on the long side. Sakshi.
Absolutely, Shail. Sony, let me just draw your attention to a few more stocks, especially in the cement basket. You know, in the F&O space, I'm looking at Ramco Cements now moving higher, 2.3% up. Even in the Nifty 500 basket, you know, stocks like India Cements, JK Cement, Dalmia Bharat, they're all moving up in trade. How would you look at the mid-cap cement basket and anything we've been discussing all through the large caps, you know, stocks like Ultratech that still remain one of the top bets for most of the analysts that we've been speaking to over the last few weeks or so. But the mid-cap cement basket, any particular stock that you can highlight from here?
So Sakshi, coincidentally, even I was just looking at the cement basket as of now, and cement, although good, it's better for any dip to be bought as a whole sector. Whether I look at Ramco Cement or India Cement or Ultratech, also, I think it's a buy on dip sort of a sector at the moment. We'll try to place the bets on Ramco Cement, because Ramco Cement is indicating that it will give you a small dip the moment it breaks the level of 1,000. You can see that it dipping for towards 980 odd level. So I think that becomes a important level. So the buy on dips view will work well over here. A moment you see Ramco Cement below 1,000 and in the range of 1,000 to 990, you can accumulate in that range, and you can keep a stop loss of 960, because that's a very strong and good support. So I think 960, from where it can bounce back and head towards 1,040 odd levels gradually. So I think Ramco Cement remains a good bet, but it will be a buy on dips. As of now, we see some weakness coming in, and it can test and break 1,000 levels.
Okay, fair enough. Another stock that's moving up in the F&O space is Dixon Technologies, 1.5% higher in trade. Of course, it's a little higher ticket item, but anything that you'd like to share, your view, Sony, on this one?
So Dixon, the breakout has just been continuing above 5,500, and there has been no short breather. Like it's just a very strong run up till 6,700. So I feel that immediate basis 6,100 is the level where it can fall to. So there could be some minor profit booking, but that becomes a good level to re-enter again and initiate longs. So anyway, closer to 6,100, you can re-enter places very small stop loss of 5800. It's a positional play, so 5800 becomes your stop loss, and then again you can look forward to targets of 6700, 6800. So the moment you get, I think, the entire pack, the entire sector, and the way the stock has been rallying up, a buy on dips is a very good strategy for this particular level. Just follow the levels that I've mentioned.
Okay.
Okay, I'd like to mark BEML again, 2750, and this, ladies and gentlemen, is a record high. It's just taken out its previous high of 2720 rupees, which was hit on September 11th. So between then and now, which is a 3-month journey, the stock is now at a fresh high. We've already marked this one via Sony. What else is moving which catches the attention on the long side? Remember, defense is something which is holding fort, but what is moving is defense as well as railway stocks, and of course the shipbuilders, as Sakshi pointed out. GE Shipping, Garden Reach and Cochin are at days high as far as prices are concerned. What has now started moving is Cochin Shipyard, 1332. So that's how the structure is. Decent block deals happening on this one, and of course both Sakshi and Sony have marked this one. To you, Sakshi, what are you watching at the moment? 9:50 in front of us.
Absolutely, but like you pointed out, Shail, there are slight dips on the benchmarks. We're also looking at the mid cap and the small caps now coming under pressure. Most of the sectors are now down in the red. In fact, the healthcare stocks are also now turning flattish with a negative bias as of now. So the safer points, safer sectors today is the FMCG pack, 0.6% higher, the oil and gas sector, 0.5% higher, consumer durable space, 0.2% higher in trade, the small caps slightly up in trade, just above the flat line right now. So the sector that we've not discussed widely with you, Sony, is the consumer durable space. So let me just bring out a few stocks from here so that you can give us your view on any of the stocks that you may be finding positive on the charts as well. Orient Electric, for example, is now moving up 3.4% higher in trade. We have TTK Prestige, Whirlpool, Kajaria Ceramics, that's up in trade, Voltas, V-Guard and Titan, of course. These are the stocks that are moving up. Anything that strikes you from the consumer durable space?
Definitely, I think Titan looks to be a good buy from current levels. Although the base that I can see is somewhere closer to 3520, so that becomes most likely a positional play. So I think 3520 is a good support. If it's not breaking that level, you can see it trying to attempt to break higher levels of 3700, 3680 to 3700 resistance. So the moment it's broken out that resistance, it becomes a fresh breakout, it becomes a fresh rally altogether, and Titan can again lead towards 3860, 3880 levels. So I think Titan becomes a pick on intraday basis. If one has to see the support and the stop loss, it can be placed at 3600. If 3600 in spot is broken, then it can come down to 3550. And the closer it is to 3500, 3520, the better your risk reward ratio will be favorable. So it's a good pick. You can do it on buy on dips also, maintain the stop loss, and it is definitely taking out, poised to take out the resistance of 3700.
Okay. One more stock I will discuss with you, since we are talking about consumer durables and consumer sentiment. The online marketplace stock, India Mart Intermesh. I know it's 2900 rupees ticket price, but it's moving up in the F&O space. It's 2.3% higher in trade. Sony, would you take this trade?
Definitely, Sakshi. I think the stock has given a good, bottoming out structure from 2550 levels, and slowly, gradually, it has broken out its resistances above 2700. So it's well placed at current levels, and it is definitely heading higher for intraday basis. I can see 2950, 2960s for intraday levels that it can test, and with a good support stop loss of 2850, 2860. So I think you can place the stop losses at 2850 and look for targets of 2960 for intraday. And the moment it's able to cross that positionally also, the stock is poised to take out levels of 3000 plus levels. I think it's quite strong from here. The pattern is rounding bottom pattern on weekly charts and looking quite strong to take out the high resistances and continue with the rally upside.
Okay, Sakshi, some of the stocks have restarted their upward journey after a 2-week pause, and among them BPCL 451.30. A nice correction came from 480 to 450, 445 over the last 5-7 trading sessions. Before this runs away, Sony, your view?
Right, Shell, I remember discussing the stock 2 weeks ago, prox, and I had given the view how it will come towards levels of 440 odd, 440 odd levels. I think that's perfectly well placed, and it's worked out quite well as per the view, and it's trying to bounce back from this 440 support. So in any case, 440 is your stop loss for anybody wanting to enter fresh. It remains a very good support. If it's breaking, then one must exit. You can see further coming down to 415. However, if it's holding on to this support and it is taking out intraday basis, if it's able to cross above 455, then you'll see it heading back towards levels of 470, 480. I think it's very well placed as per the risk reward ratio, and looks quite favorable. We can see some positions also adding up in this.
Okay, so BPCL is there for you, and a very, very strong breakout happening on Naukri.com. Very high ticket, I'd rather not mark, 5,294. I'm just putting it in front of you. And Sakshi, what else is moving? We are in the final moments of the show today. There is a move that is coming on, hold your breath, Cochin Shipyard. This is what you and Sony had pointed out, 1336. Now serious block deals happening on this one. I would imagine that this is also a record high on Cochin Shipyard, and if my understanding is correct, this one is also headed for a stock split. Sakshi, why don't you just look at prices, and I'll find out the Cochin Shipyard date of split.
Sure, absolutely. Sony, another space that we haven't discussed quite as much, you were discussing BPCL, but extending that to the power space as well. We've also seen Jefferies come out with its report and its top bets from this space, including NTPC and Power Grid. Both of these stocks are also moving up higher in trade, along with Coal India as well. So the entire power space is in the buzzing space yet again. How would you be looking at, say, the top stock from this entire space, technically speaking, purely on charts? Which one would you go with?
So if I can look at, I think NTPC would be a better pick as of now, the current, because there was a resistance which it has broken out, and the resistance is of 300 level. So it's broken that out and it's sustaining above that. So 300 becomes immediate basis support. Moment it's holding, and even in such choppy markets that it is holding on to the support of 300, it is definitely poised to head towards its upper side resistance target of 320. So I think NTPC well placed, 295, 300, 295 you can place your positional stop loss, 300 can be your intraday stop loss, and targets can be to 320, 325.
Okay.
Sakshi, I think we need to have a look at Naukri. The price is so high, I hesitate to mark it, but nevertheless, Info Edge India for you, ladies and gentlemen. 5305, and this is a breakout. This price was last seen in January of 2022. Oh, so it's a 2-year breakout. That's very interesting. And therefore it needs the attention of Sony. Unwillingly from my side, Sony, I generally don't look at high ticket size, लेकिन भाव भगवान है, और इसीलिए आपके सामने ये आपको 5320 रुपए पे ट्रेड करता हुआ दिख रहा है. Your view?
Right. So I think Shell, the way you've rightly pointed out, it is at a multi-year breakout, like a 2-year breakout. Even I can spot, and with such good movements, you can see that the stock is heading towards 5,600 as a positional view. I think that's where the stock is well placed. On the downside, 4,950 is a good support. As long as 4,950 is holding, it may consolidate, it may try to remain in this particular range, but ultimately with the yearly breakout, it will definitely try to take out levels of 5,600. So I think that's a positive view on the stock for a positional view.
Okay, well, on that note, thank you so much, Sony, for spending all that time with us, spotting stocks and sharing your views with all our viewers. Many thanks. Always a pleasure having you with us. Let's start wrapping up the markets for this edition. You're actually looking at the benchmark slightly down in trade. So the Nifty and the Sensex are down about 0.2 odd %, whereas the sectors like defense and railways that are moving up, and of course FMCG, pharma, these are the stocks that are moving up in trade. So let's look at some of the defense majors like BEML. Shell pointed out it's now moving as the top gainer in the Nifty 500 basket, up over 5 odd %, 5.5 odd % right now. Of course, the railways pack IRFC is the top counter there, and that's moving up very, very sharply, 4.5% higher for this one. The shipping counters that I pointed out, Cochin Shipyard, 4.5% higher. You have Great Eastern Shipping, that's up by almost 3.5% up in trade as well. So these are the top movers in the defense majors and this railway pack as well. From the pharma space, again, you have counters like Sun Pharma, Cipla, Dr. Reddy's moving up in trade. You have Torrent Pharma in the F&O space that's shot up 5.3% higher in trade as well. FMCG, we marked out ITC for you. Nestle, of course, we discussed both fundamentally and technically for you. Britannia is picking up pace. It's now up by 0.2% odd. Again, a very heavy ticket item. In the other stocks from the FMCG basket, it's and of course the consumer durable space as well. We discussed Titan, now Tata Consumer Products. That's the one that's moving up higher in trade as of now. So that's as far as the entire market momentum is concerned. We'll continue to track the markets for you through the course of this trading session. Don't forget to join us for the closing trades as well. Many thanks for joining us. Both Shell and me say goodbye to you at this point.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Are you looking to buy gold? Well, this could be a great time to invest in gold as sovereign gold bonds